Welcome to Audit Pros Inc. This is an education series that we're going to bring to you, starting off with the mortgage crisis. There's a lot that we need to know and get educated on. And you can make a difference by spreading the word about these videos, because everyone needs to know what's going on with the mortgage crisis. Now, it may have started early 2000s with loan guidelines. What I'm talking about are loans that were so easy to qualify for. In the mortgage industry, they had a saying, if you had a pulse, you could buy a home. A lot of these were adjustable rate mortgages, mainly in the subprime and Alt-A category. They had low initial rates, but these rates could go up 5, 6, or 7% above the initial rate. And that was controlled by margins and caps. So you could have a loan at 5% and it had a 7% margin. That could go up to, we all know what 5 plus 7 is, right? 12. From 5% to 12%. That's a huge increase. Now, what was this loan approved at? Was it approved at 5% or 12%? It was approved at 5%, but had the potential to go to 12%, and many did. I don't know too many people that had a 5% interest rate that could afford a 12% interest rate. But people didn't understand these loans when they got them. There was misrepresentation. Oh, you could refinance before that happened. Yeah, you could, but the market changed and you couldn't anymore. There was no equity to refinance. So you were stuck, and you ended up losing your home. Approving high-risk mortgage loans. Now, why was this happening? Why would an investor or a bank want to approve a loan that was high risk? Well, let's look at your money, a dollar bill. That's a note. Now, a bank can't create money. They're not a mint, but they can create notes. When you purchase a home, there's a note being created, and they could take that note and sell that note and make a profit. Now, do you understand why it was easier to get these loans approved? Maybe it was because of the greed. More notes, more profit. But who did they take advantage of? The homeowner. Were you used? Possibly. These notes were securitized and sold. In fact, some of these notes were duplicated illegally, otherwise known as counterfeit notes. 2 or 3 copies made, sold to domestic investors and the foreign investors. These notes were fractioned. 2, 3, or 400 fractions. Who really owns your note? It was a mess. And it still is a mess. And it's ruining this economy. Then there's fraud. Now, fraud happens on all levels. With the banks, and with the recent settlement, they pretty much admitted they were committing fraud, but yet nobody went to jail. If you committed fraud, where would you be right now? But fraud also happens with homeowners, investors. Let me give you an example. You may have an investor that buys 3 properties in 1 month, and they'll send it to 3 different banks, and they'll say it's their primary residence, but yet it's not. See, the interest rate for a primary residence is lower than an investment property, and they want the lower rate. But they were really buying investment properties. That's fraud by the borrower. So fraud does happen on all levels. Homeowner concerns. You need to be careful with this. Summary judgments. What are they? Well, if you have a lis pendens, you live in a judicial state, the lis pendens will come when you're not making your mortgage payment, sent by the bank, and then you have 20 days to respond. If not, you're in default, and that bank will seek a summary judgment of foreclosure, and they could take your house away from you. So if you do get a lis pendens, you need to respond to it within that 20 days. Then you have default judgments. You have a foreclosure, you think you're done. Well, you may be in for a shocker. The bank has up to 7 years to sue you for their loss. So any loss that came from that foreclosure, they can go after you. And you thought, foreclosure, I'm done, I don't have to worry about it anymore. Deficiency debt. You got rid of that home. Short sale. Well, you may be in for another surprise with this one. Let's say you had a $200,000 loan and it's short sold for $100,000. That's a $100,000 loss to the bank, and they can tax you on that. And that looks like income, $100,000 income to you. And that's mainly on second homes and investment properties for the year of 2012 through December 31st. Will it continue past that where the primary residences are protected? We don't know. After December 31st, maybe the primary residence will also be a victim of this deficiency debt. But for now, you can file an IRS Form 982 and get that waived, but not for second homes and investment properties. Then there's a complete lack of education among most people in this country. Not only did they not understand the mortgage when they got it, they don't understand the crisis. You see, maybe that bank or that servicer foreclosing doesn't really own the property, but yet people are walking away and just giving it up. So let's look at some solutions. A forensic audit is mainly information. That's what it is, information about your mortgage. It's not going to go very far if you're trying to fight a bank, but it does give you information, and it does address certain issues that are important. It's going to analyze your mortgage, all the paperwork, your disclosures, your good faith estimate, your truth in lending, your loan application, the loan program you're in, your interest rate, your annual percentage rate, your fees. Looks at everything and gives you a report. What's really important is a securitization audit. And that analyzes your note. Maybe there was a robo-signer, break in the chain of title, the endorsement, the allonges. Maybe your mortgage and your note were separated, which means bifurcation. So you have a note with a promise to pay nothing because there's no mortgage, or some states have deed of trust. They were separated. It looks at everything, the fractioning, the 200 to 300 or 400 investors there may be out there on that. It tells you who has standing to foreclose. So maybe that party that's foreclosing does not have standing. Quiet title. It clears a clouded title. Now, when you buy a house, everything's fine with your title, but as years go on, nobody really knows who has possession of this title. It's all mixed up and it becomes clouded. What you do is file a complaint, which is a lawsuit, and one of the items you're seeking is quiet title to see who really does own it. And they have to come forth within 20 days to answer your complaint. Now, they can ask for an extension, which is usually granted, but they're going to have to provide evidence that they own your title. If they don't respond within the 20 days, just like you with a lis pendens, they're in default and you can get a default judgment. Credit default swaps. Now, a lot of people don't know what this is. It's an insurance policy that investors would take out on securitized notes. And if the homeowner defaults, usually the 91st day, and they had this policy, they can get a claim. So if the investor's been paid for that note, how can they foreclose? Well, they usually don't. See, the servicer looks at this and says, wow, the homeowner thinks that we're the investor. Because you do. You made payments to them. You think they're the investor. The investor's not doing anything. They've been paid. Maybe the judge doesn't even know this. Or the lawyers don't even know this. Homeowner doesn't know this. We're going to take the house. And people do nothing about it. This is just the beginning in a series of education videos that we're putting together for you. I like to keep them brief, but also provide you with the information. So you want to check out the rest of the videos that we have and spread the word. This is free. People need to understand what's going on. We're not being educated. We weren't educated when we bought the home. We're not educated through the entire process. Loan modifications aren't working. The so-called settlement with the 5 major banks doesn't appear to be working. Everybody's upside down in equity. You see, when somebody forecloses, it affects the entire neighborhood because the prices drop. Same thing with a short sale. The prices drop. So you may be on time with your mortgage, but the houses on each side of you foreclosed, and you just lost a tremendous amount of equity. It's going the wrong way. They said a home was the best investment you can ever make. It's not much of an investment right now. I'd like to thank you for taking time to watch this video. We have other videos as well for you to look at. And again, please spread the word, because without that, we're not going to be able to help people. And this is an election year, by the way. And I don't see much being done toward helping the homeowner. Again, thank you for your time, and we wish you the best.